Hi, good afternoon everyone. My name is Ram Dhamija and I bring to you my analysis of the markets every day. And today is 18th of December and I'm here with my market report. So what exactly happened today and how are options looking? As you would have seen in the title of the video, the open interest is at a historical low. So the put call ratio as we speak is only at 0.4. So there are about 31 crore calls written in Nifty versus a 12 crore put written. So this is a very highly lopsided open interest position. Why this is happening, we will only come to know tomorrow because tomorrow is the expiry. So typically such high open interests do culminate into one side movement. So we will have to wait and see what exactly happens tomorrow. So the PCR when the week started was almost at 1. From there it went to 0.7. Then yesterday it was about 0.5 if I'm not wrong, and today it's 0.4. So the short positions are getting built. People are writing a lot of calls. And another interesting thing that happened yesterday was that FIIs created huge amount of shorts in the system. So they sold almost, I think if I'm not wrong, 6,000 crores yesterday. So the FII figure, which was close to about 13,000-14,000 crore positive, is now only 5,000 crore positive for the month of December. And if today we get a sell figure of 5,000, then it would mean that December month again goes flat. And this is after, as I had said earlier, a 1.2 lakh negative sale of FII in October and November. And we have seen how the markets tank. Interesting thing is that Nifty has corrected a lot and Nifty is almost minus 8% from the top. Please do remember that it had gone to minus 11% as the last bottom that was made in Nifty. So we are again at almost there. We are at minus 8% now. What are the other indices looking like? Nifty next is at minus 8.5% from the top. FMCG index surprisingly is at minus 15%. So we can see a lot of pain in consumption stocks, which I had talked about earlier, and that is getting manifested in the price. Also some the multiple rating is happening in FMCG companies. So we are seeing the price earning ratio come down from 70 to 50 and 40s and so on. So they're very good quality companies, but of course everything comes at a price. So the price is getting corrected there. Metals is down minus 12%. Banks are down minus 5 odd percent, but PSU banks are down minus 16%. So that tells an interesting story that where the market is moving towards. Autos minus 16%. Mid cap and small cap have corrected much less. So mid cap and small cap is about minus 5 odd percent, and small cap is even lesser than that. So this basically tells that FIAs, which typically sell in big names, blue chip names, index names, where their presence is prominent, those indexes are falling more. Whereas where the small retail players participate, those indexes are haven't fallen that much, which basically says the role of SIP somewhere is working for retail participation participants. Another interesting thing that happened yesterday and today is that the straddle decayed. Now we had seen that straddle had not decayed for 3 days. Friday, Monday, Friday, Monday and Tuesday it started to decay. And today is Wednesday, the second day of decay. So there was actually no decay in straddle for 2-3 days, and the decay only started yesterday. Now the straddle as we speak stands at 140 for Nifty, which again is very less because this is what the straddle premiums used to be before the new rules and regulations came in. So if there is a huge one-sided movement tomorrow, then 140 points premium is nothing to save the option sellers. We have seen Nifty actually moves 500-600 points on expiry days up and down. So what will a 140 point straddle be able to do if anyone is selling fixed options? We have a Fed meeting coming up, which is going to be a very big trigger. Let's see how the markets react to that. There is a 0.25% rate cut that has been factored in the Fed meeting. So let's see if that delivers. If there is a disappointment over there, if the world markets start to crack, then of course we are going to feel the heat of that. Today's Nifty IT and Nifty Pharma were up. And one reason for that is definitely the currency. So our currency futures have crossed 85 to a dollar in INR. So basically what that means is that this is good news for IT and pharma companies, and hence we are seeing some sort of a buying over there. IT had recently made its all-time high as well. So we are seeing that currency play come into the stocks as well, whereas the domestic facing industries like FMCG etc. are going down, autos are going down. IT and pharma are creating all-time highs because they have the currency tailwinds working for them. So having said that, let's see how tomorrow pans out. Tomorrow is the Nifty expiry. The premiums are not looking good. The OI is quite horrifying. What sometimes also happens is that with this kind of OI, some reversal also happens because there's extreme bearishness that has been made. But having said that, when this kind of OI is made, markets will tend to go at least down once. That has been my observation. And then they might recover intraday. But or if the recovery happens immediately, then it's going to show up in the OI. There's going to be huge covering in terms of the OI. So we will have to see how tomorrow pans out. It's going to be an interesting day. So I will keep you posted with my observations. So that's it for now. If you like the content, please do subscribe to the channel, and please do share it with one or two of your friends at least, so that they can also benefit. So I'll see you tomorrow. Have a nice trading day tomorrow as well. Bye bye.